Hi there, Serial Trader here. I'll do an update on the major US indices. It's been a while since the last video. I was anticipating this could potentially just be a fourth wave pullback, ABC three-wave decline, and don't get another move up here. Well, that certainly happened in spectacular fashion. Very aggressive. So I think the way I'm looking at this, we got a 1 ABC expanded flat wave 2. This is clearly a third wave, very aggressive, powerful, multiple gaps. So not much really to debate about that. Third waves usually stand out as being quite obvious. So I think the play here, as far as a trade idea, wait for this to stop going up if it hasn't already. And then try and catch a fourth wave correction to set up for another wave up for a 5 here. And then maybe we can start thinking about something more bearish, setting up some downside trades. But I don't think you have a completed pattern here to really even be leaning on that idea yet. So got to get the 4 and the 5 to at least entertain the idea that we completed the move out of this, well, I guess it was most of September and part of October's correction there. Okay, and just if we're making the assumption that this is our wave 2 low, this is our wave 3 high, so some common, and also making the assumption that wave 3 is complete, which it certainly may not be yet. We look for some fib retracements, and the shallowest one would be the 46.26 level, a 23.6% retrace. Then you get the 38.2% retrace down here at 45.70, and then the 50, and so on. So that's what I'd be looking for as far as an entry. I don't think there's a whole lot to do at this current juncture. I got to wait for some pattern development before something sets up. We are overbought on the 4-hour. The hourly, actually, we're just starting to come off overbought condition on the hourly. Very overbought on the daily. Very overbought on the weekly. Are we overbought on the monthly? Yes, we are. So we're certainly vulnerable to some sort of pullback here, although I think just given the pattern development, it'll probably be a relatively modest wave 4 pullback, but we'll see. Maybe this coming week we'll finally get some sort of, instead of this one-way action, we'll get some sort of give back here. Okay. And then, I mean, I'm not going to get into the overall wave count off of our March 2020 low. There's so many multiple ways to interpret this, and it's just not clean enough for me to say, oh, we're about to, make the absolute top, or there's even good reason to think we're about to make the absolute top. I know things are getting pretty crazy out there right now, but just not enough here for me to say, oh yeah, we're about to put in some huge cycle high and have a major crash or correction. I'm sure that'll happen, but I'm thinking more so sometime into next year to be looking for that. I think we're running out of time here as far as the rest of this year to get something like that going. Hey, something could surprise us, and it could happen quickly once it gets going. But currently, looks like we have an incomplete impulse out of this most recent correction we did. So I think the short-term focus should still be on corrective pullbacks and looking for more upside until something substantially changes to get us off that track. Okay, so that's probably all I need to do with that. We'll go to the Thinkorswim candlestick chart. So daily candles here on SPX. So I forget how many unclosed gaps we have. So here's another thing. You know that on the indices in particular, pretty much all gaps eventually get closed with very, very few exceptions. Now when you stack multiple gaps on top of one another, so we have a gap right here, gap right here, gap right here, and I believe there is one more less obvious one in there somewhere. But I do believe, yeah, okay, so we've got the 1, the 2, 3, 4. So I think we have 4 unclosed gaps underneath of us. And I'm confident that at some point all of those gaps will get closed. So to close the lowest gap would bring us down to, 43.72. Probably not going there, right away, but whenever we complete this sequence to the upside, I think on the pullback, you should be looking for some gap closes for a nice kind of technical magnet, if you will. But yeah, right now all we have as far as daily candlesticks, we got a potential doji star reversal. Obviously, we need to confirm by actually not taking out the high of the candle and actually starting to go down. So a doji star can just be a pause within a trend, or it can be a reversal when it's near the extreme of a range. Well, we're certainly at the extreme top of an overbought range. So definitely watching this to see if it's a potential reversal doji or not. Other than that, not a whole lot to comment on here. I won't look at the weekly because there's nothing remarkable. Just a big green weekly candle. Okay, so we'll go to the Dow Jones Industrial Average. Similar situation. We have multiple gaps below us. In fact, we also have a gap that went unclosed there just on Friday. And a potential rejection, kind of reversal looking candle. Obviously need confirmation. Overbought, of course, as well on the Dow. Not much to comment on other than that. NASDAQ composite. Let's see what we got here. Again, similar multiple gaps below us on the NASDAQ composite. Although not as many gaps by the looks of it. But still, this gap down here certainly at some point I think will get closed. Once we're done our blow off top here, if that's what it is. Potential reversal candle on Friday again on the NASDAQ, but we need some confirmation. We have to start actually going down here. Could just be a pause and we could still have more to go. So nothing definitive there just yet. Okay, that's NASDAQ. Now some things that kind of have me looking for a reversal here. So even though we were up big and all-time highs closed at all-time highs, etc. on Friday, VIX actually had a up day. So normally there's an inverse correlation, a strong one, where VIX goes down as the market goes up and vice versa. Well, when VIX starts going up noticeably, even though the market's still going up, to me that's kind of a warning that the big boys are getting their hedges on because they're about to pull a rug, or they know that the rug's about to be pulled, however you want to view that. So that gets my attention. Now, if we look at the VIX VVIX tool, so we have the preconditions for a sell signal. Now, there's no real divergence, at least, a localized, relatively shorter term divergence between VIX and VVIX. They're more or less in sync here. They both kind of bottomed out in a similar position and have reversed. But there is a divergence in the sense that, okay, VVIX and VIX put in their lows here, but SPX put in its highs later on. So that's kind of a divergence between the highs and SPX and the lows and VIX and VVIX. And we do have VVIX getting well above the red moving average here. So obviously to get a confirmed sell signal, we got to get below this blue moving average here on SPX. And right now that's, we'll call it right around 46.50, 46.48, but that's a moving target. So probably even when it opens on Monday, that'd be closer to 46.50. So definitely on watch for a sell signal and a reversal. Just going back to this chart for a moment. Once you get that sell, at least initially, I will just be expecting a fourth wave corrective pattern. It would have to be very aggressive and very, deep to, take away that idea and say, oh, well, maybe we've somehow actually put in a more significant top and we're doing something more bearish. But not currently expecting that until something changes. Just expecting some sort of corrective pullback. Okay, so that's probably good for this video. I'm about to do one on requests there I got a few days ago. So if you want to check that out, feel free. All right, Serial Trader signing off.